Hey everyone, thanks for joining us today. I am Amber Cole. I lead growth marketing here at RecVue, and I'll be your moderator for today's session. We're here to talk about something that sounds simple, but clearly isn't: getting from orders to actual cash. Because what we're seeing across enterprises is this: revenue is being generated, invoices are going out, but cash is still arriving later than expected. And that gap is where working capital gets tied up, forecasts get fuzzy, and finance teams spend way too much time chasing problems downstream. Today is about fixing that, not just in collections, but across the entire order to cash lifecycle. Quick housekeeping before we jump in. The session is being recorded. We'll send it out afterwards. We'll also have time for Q&A at the end. So please drop your questions into the Q&A module at the bottom of your Zoom window as we go. Don't wait, ask them in the moment. We'll be covering a lot of information today. Now, let me introduce you to the team you'll be hearing from today. First, Nishant Nair, founder and CEO of RecVue. Nishant has spent over 2 decades helping global enterprises rethink how they monetize, manage, and convert revenue into predictable outcomes. Next, Robin Beetge, COO at RecVue, with deep experience scaling enterprise SaaS organizations and driving operational excellence across finance systems. And finally, Edouard Beauvois, VP of Sales and Partnerships for EMEA and founder of AI Evidence, bringing deep expertise in AI-driven receivables and cash management. Gentlemen, I'll invite you to give us a quick hello.
Hello, everyone. This is Nishant here.
Everybody, this is Robin. Great to have everybody on this exciting webinar today.
Hi, everyone. Super excited to be here today.
Great. Now, let's get into it. Nishant, I'll be handing it over to you to set the stage, starting with what's really broken in today's revenue infrastructure and why this moment matters.
Perfect. Thank you so much, Amber. Hello, everyone, and welcome. Thank you for joining us today. I'm Nishant Nair, founder and CEO of RecVue. Over the years, I have worked closely with several enterprise customers on some of the most complex order to cash challenges. And today I'm excited to introduce cash conversion as a new pillar of a RecVue revenue operating system. Next slide, please, Amber. So before we get into cash conversion, let me take a minute to introduce RecVue and the problem we solve. At RecVue, our mission is to simplify revenue complexity. Today, our platform manages over $110 billion in revenue annually across more than 50 countries. We serve customers across industries like transportation and logistics, technology, media and telecom, business services, AI infrastructure like data centers, and wholesale and distribution as well. Next slide, please. And while working with enterprises in these industries, one of the consistent trend that we have seen across all industries is that the revenue models are evolving rapidly. Customers expect more flexibility from the vendors, and custom pricing and billing terms are becoming more of the norm. Sales teams are more than happy to oblige, but the systems supporting these business models haven't really kept up. What we have seen typically is a mix of mainframes, disconnected custom systems, and heavily customized CRM and ERP platforms. And these systems were never really designed for this level of complexity or scale that we are today seeing with these innovative revenue models and business models. Next slide, please. So visually, this is what it looks like, right? You have CRM systems managing the front office, ERP systems managing the back office, but the order to cash process, which we believe is the lifeblood of the business, sits in the middle disconnected, fragmented, and pretty much stuck in the past with the systems that were never built to scale or to manage these business or revenue models. And next slide, please. And that disconnect, that dysfunctional middle, as we like to call it, creates real business challenges. It causes invoices to be delayed. It causes revenue leakage. It causes the DSOs to be higher, because if you have delayed invoicing and inaccurate invoices, that obviously has an impact on your DSO. It has an impact on it causes poor cash forecasting, trapped working capital. And because of all of these different systems that handle this particular problem, there is limited visibility from the contract all the way to when cash is received. And that's essentially the problem that we solve, or we are addressing, with RecVue's revenue operating system. Next slide, please. With revenue operating system, we provide a unified end-to-end order-to-cash platform that bridges CRM and ERP together and enables enterprises to manage even the most complex revenue models with control and automation. If you look at revenue operating system, our vision has been for it to be a unified solution built on 5 core pillars. The first pillar is contracts and pricing, where you have all your contracts captured with various complex pricing rules. And then the second pillar is billing and invoicing, that ensures that accurate invoices are sent to the customers on a timely basis. The third pillar is revenue recognition, which ensures that revenue for those contracts, performance obligations, and all of that stuff, revenue is properly recognized as per your ASC standards. And then you have the fourth pillar is the cash conversion pillar, which we are going to be introducing today, is essentially to ensure that all the different processes are taken to make sure that cash, finally, right, at the end of the day, the revenue gets converted into cash on a timely basis. And then the fifth pillar is a revenue share pillar, or a partner compensation for companies that have that resell or that have things like royalties or a marketplace, where a percentage or a share of revenue is distributed amongst partner. We do have a pillar focused on that as well. And with revenue operating system, enterprises now have an end-to-end view on their entire contract or order to cash. And today, we are going to be focusing on the cash conversion pillar, and specifically how enterprises can accelerate the journey from revenue to cash, improving cash predictability, and unlocking working capital. With that, I would like to hand it over to Amber, and thank you again for your time.
Thank you so much, Nishant. That idea that companies have invested billions into CRM and ERP, and yet the actual execution of revenue is still fragmented, that's the tension we hear constantly. Robin, let's bring you in here. You've spent years helping enterprises operationalize this. Talk to us a little bit about what this looks like in practice and how organizations are starting to rethink the order to cash lifecycle.
Yeah, that's great. Thank you, Amber, and thanks, Nishant. So just to introduce myself before I get into some of the background in terms of the detail around how RecVue as a revenue operating system addresses some of the big challenges we see in the order to cash lifecycle. I introduce myself. So I've been with RecVue for just over 5 years. My background prior to RecVue was with both Blackline in terms of financial close, and then various other companies from a procure to pay and from an order to cash perspective, leveraging investments in ERP. So looking at data that's currently there, not trying to replace accounting systems, but really filling the gaps in terms of automating those systems. So over 25 odd years, probably more than that now, experience in this space. But yeah, I think my perspective is always around value first. And if I go back to .com days, which was where I kind of started, I guess, is I think some of the big gaps we found there was the ability to address value, right? So that'll be our focus and my focus over the next couple of slides. Thank you, Amber. So I think if you look at we walk through an order to cash life cycle, my perspective is I always start with the business model. And if you look at any of the big four taxonomies, you'd look at some type of a framework that covers a journey across a transaction. And that journey would usually start out with some concept of a business model. And that business model, in terms of its definition, has a set of contracts and rules and principles that define it. But if you take a level up again from that and you look at what that means is, in essence, every business today has a blend of some legacy business models, their current revenue streams, and then a plan as to where they want to be in the future. So that blend is really one of the first precursors to the complexity we see in large enterprise today. Business models are not iterative. We don't tend to see companies flick a switch and move from one to the next. They tend to be additive. And business models obviously are only there for one reason. That's to drive revenue and to facilitate revenue streams. And then off the back of that, we need to make decisions as to how that revenue is monetized. So this continuously growing complexity around additive business models and how these different business models are monetized is the first big step. Once we understand where we want to go as a business, we understand the requirements in terms of the rules and the pricing and the structures of our commercial arrangements with both our customers and with our channel or our partners. We then have determined that we need to build some logic and some structure as to how we convert that into dollars, right? So this is the piece that the monetization step in this cycle is obviously taking contracts and converting to revenue, right? That's what we're all here for from a business perspective. So I alluded to it just now, but every time we have a partner involved, we would usually have some type of incentive for that partner, which could be a rebate, or it could be a settlement, it could be an owner-operator model that we are facilitating, and we are facilitating the sharing of revenue as an incentive for that partner. So I see this as the accounts payable flip side to the receivables coin. So we've got the business model. We've monetized this business model and we've generated revenue off the back of it. Now the question is, how do we calculate, before we get into things like revenue recognition or collecting cash, with that net revenue that we need to be recognizing, how do we calculate what that share should be, what that contra revenue or that expense item should be? And that's the payable side of the coin. So we have the receivable and monetize, then the payable and settle, and this is calculating any permutation, any variation on the theme of a payable. Sometimes the monetize and settle are between the same two parties. So you might have a receivable calculation and a payable calculation between the same two entities. And that's an interesting, we see it a lot in telco infrastructure. We see it in REITs. Very common where you have two parties that are both sharing revenue and sharing costs and need to bill and share revenue between the same two. Then the purpose of this call today is really looking at the recollection side. So now we understand what we need to collect in terms of cash. How do we manage that? How do we manage it in an intelligent way? And Edouard will cover that in a second. And then finally, from a revenue recognition perspective, whether based on our geography and the accounting standards that we need to apply, the question is always, we want to apply AC 606. We're leasing assets. We need to possibly apply AC 842 as well. We have a European entity, so we need to be cognizant of IFRS 15. So how do we apply that framework to our business? And how do we apply it to our interpretation of those standards? So this is the end-to-end life cycle, starting out with our business model and the definition of that business model, and then following right through to how that revenue is recognized. Now, obviously, there are additional layers to this. If you think about it from a process governance perspective, we need to be able to manage our reporting, both our financial reporting and our internal reporting. If you look at the collections piece, right, we need to have a defined collections strategy. We need to make sure that all of our activities are documented, our processes are automated. Going back a step, right back to the contract and how we're setting up that contract at the beginning under that definition phase. There are multiple steps around establishing our contract portfolio, making sure that our contracts are converted from SharePoint into a standard manageable format that we can use to determine how a price or a rule should be expressed based on multiple sources of input data. So there's a lot of other detail that runs underneath this, but as a life cycle, this would be our typical end-to-end journey that we'd walk through from an order to cash perspective. Thanks, Amber. And before I hand over to Edouard, we thought we'd just give you a high-level overview as to how RecVue manages and how RecVue talks to these challenges. And so I'll start out at the top left-hand side. I ended on the life cycle looking at the contract. And contracted pricing for us is obviously crucial because contracts are not static. Contractual amendments are continuous. So as we are processing transactions, as we are looking at contracts to determine how different pricing rules or revenue share rules should be expressed, we need to make sure that we have a framework to be able to capture and manage continuous amendments to those contracts. From a pricing perspective, we know that on some timeline, pricing will change. It's either going to change based on a ramp or a CPI increase or some other term that determines how that contract expression is changed over time. So contract management is really crucial for us. But to determine what the contract should be, what the pricing rules should be, and then ultimately how we're billing that contract, we are usually dependent on multiple sources of data. If you think about some of our customers, they might have 21 warehouse management systems or multiple mixes of CRM and CPQ systems based on their history and acquisitions or their internal strategies changing over time. So the data sources and the standardization of that data, which we would traditionally have just talked about as data mediation, has a massive role to play. And that's at the center of this diagram. So I'll start with the contract because contracts are essential to everything we do. But I'll bring your focus straight to the middle of this diagram, which talks about our agentic data hub. And this is a transformative data process. It's about standardizing data, transforming data where that's needed, but also providing intelligence as to the nature of the data that we're receiving and managing exceptions early. So the earlier in a process that we can extract or manage or filter out an exception, the less it costs us to fix that exception, right? So I'll highlight those two in terms of foundational pillars to the RecVue solution. And then looking at what's leveraging those foundational pillars up to the right-hand side, billing and invoicing. This is any revenue stream, this additive business model evolution that we spoke about earlier, as we have more and more complexity coming in, more data sources we're depending on. How do we calculate an accurate price for every single line item that needs to be billed to that customer? And how do we generate an invoice in the format and distribute it in the way that it needs to be received by every single customer, unique to that customer? So that's our billing and invoicing. On the other side of the diagram is revenue share. So that's the green chevron on the bottom left-hand side. So this is on exactly the same basis as we're doing calculations from a billing and an invoicing perspective. We need to be able to calculate the other side of the coin. So as we calculate billing lines and we calculate billing transaction values, we can build rules that would use attributes and go through that same data hub and then determine how the revenue should be shared with different partners and different parties. And it's not uncommon to have multiple parties share revenue on a single transaction. So all of those rules are then determined and managed by the revenue share, or previously we used to call it partner compensation, but it's broader than that, revenue share module. And then at the bottom, we're cash conversion. So now we've got to the point where we have driven these revenue models. We've determined all of our credit strategies. We've documented those strategies. We have process around our collections, etc. We need to manage how that cash is collected. Okay. And then the net effect is, from a compliance perspective, revenue recognition is a given. It's a standard. In amidst all of these revenue model changes and market pressures, our enterprise customers like yourselves would have seen a lot of compliance and regulatory pressure coming in from a financial compliance perspective. And so we could start out going back to SOX and then look straight through to how we're managing compliance from a financial reporting perspective in terms of reporting our revenue. So this entire wheel depicts the RecVue solution. And then just in terms of handing over to Edouard, the missing piece to our puzzle historically was this cash conversion piece, right? And so for us, we looked long and hard at the market to find a really strong AI-driven solution that would plug into our overall AI strategy, which is a platform and agentic strategy, to quickly provide value to our customers in terms of filling this gap in terms of the cash conversion, a piece of the puzzle. So with that, I think I will hand over to Edouard to give a little bit more detail in terms of the RecVue Cash Conversion.
Yeah,
Thank you so much, Robin. That's okay, Edouard. I want to properly introduce you here. This is the segment of the session that everybody is here for. So thank you so much, Robin, for that intro. Edouard, as you know, this is where things get really interesting. We're talking about actually converting the revenue into cash, and we're doing it intelligently. Let's have you walk us through what RecVue Cash Conversion looks like, and then jump right into the demo.
Thank you very much, Amber. So yeah, my name is Edouard Beauvois, and I'm actually one of the founders of AI Evidence that got lately acquired by RecVue. So super happy to be here, super happy to have joined the RecVue team. And today my role is actually to extend the presence of RecVue in Europe. And in terms of background, I've worked 25 years now actually in the software industry, but mainly focusing on finance. So when it comes to cash conversion, so formerly named Evidence, right? Well, you need to understand actually that the solution was originally designed to help companies anticipate payment issues. And why anticipate payment issues? Well, because it would allow them then to take early actions towards their customers in terms of collection activities. And to help them anticipate the payment issues, we actually decided to segment or to create specific algorithms to segment the debt portfolio according to payment behaviors or payment patterns, and also according to risk or understand risk of default. Next to that, we also did actually predictions, so which means that we created specific algorithms to detect when customers would pay their invoices. Based on that, the first release actually of AI Evidence years ago was a set of dashboards on top of the different calculation engines, and you see here an example of dashboard on the screen. And of course, I will go deeper into the presentation when I will be demoing the solution. But as time went along, our customers started to ask us different questions. Okay, I've got a set of KPIs. I know what's the behavior of my customers. I know which are the bad payers, the good payers. I understand how my portfolio is evolving over the time. I understand which of my customers were good payers but are now transforming into bad payers. But how do I make the best use of those data? And that's why we decided to create additional use cases, part of the solution. And the first use case that we then developed was what we called dynamic dunning. Understand the automatic sending of reminders, but instead of being static, By static, I mean you define processes that never change, and the process can be first, well, you send a dunning letter, then you ask someone to call, and a few days afterwards, if the customer still hasn't paid the invoices, you ask someone from the collection team to give another call, and so on. We decided to make it completely dynamic. I understand by that the fact that the processes will vary automatically or will change automatically according to variations of any kind of patterns, whether it's payment patterns, whether it's risk, or any kind of information coming from the outside world as well. And the idea is always to be in a position to detect what we call customer context. So what happens at the customer to make sure that the customer will pay later, and to propose actions to the user or actions to the system so that it triggers a set of steps automatically. Next to the dynamic dunning, we also created another use case, which consists into really organizing the work of collection teams. By organizing the work of collection teams, understand selecting the customers on which they will really have an impact instead of presenting all the customers to the users. And on the other hand, really prioritize the work that they have to do, meaning that every day when they come to the office, a list of 15 to 20 customers or more, depending on the organization of the company, will be ready for the users, and the user can then decide on which customer they will start working on, but at least the AI makes recommendations to the user. After that, we decided to create a credit limit, and again, to use the outcome of the KPIs that were calculated together with external data, like risk calculated by the external data providers, and combine them together, again, still using AI. Why? Well, to recalculate, say, on a daily basis, what credit limits would be. Meaning that now companies have a full system that allows them on daily basis to have workflows to decide on how they want to manage the outstanding risk that they have with their customers. Do they want to leave it as it is? Do they want to reduce it? Or do they want to open the door to more business, but then to more risk? And the last but not least, to be delivered soon, it's really the optimization of what we call the workforce effort, meaning that now we are in a position to analyze really how much effort is required to collect the money back for a given customer. And we can balance the workload between different teams or different users to make sure that, again, we optimize the collection strategy, meaning either we maximize the cash that needs to be collected, or we reduce the risk of the total portfolio, or a combination of the two. But if that's fine, let me share my screen now and show you the solution. There we go. So you should see my screen now. So I'm logging on as a manager, so meaning that I have access to everything. And again, my purpose now is not to go through all the features and functions of the solution, but I just would like to show you some of the key benefits that you get from such a solution. So first of all, from a management perspective, say a CFO or head of accounting or head of finance, you actually have a dashboard in which you will find standard or key KPIs like outstanding, overdue, DSO, but you will find as well a breakdown of the debt portfolio according to payment patterns or according to the risk. Example, here I see in my demo system, I've got 107 customers being very bad in terms of payment behavior, and I know what they represent in terms of overdue. Here, a bit more than €500,000 euros in terms of value of invoices in the system. That's one example. Of course, next to those strategic reporting, you have more operational reporting like this one, where you will see what was to be collected at the end of a given period. And you can compare it with what has been collected at the date of today. Here, I still have 1% open for invoices dating from January 2025, and I can always drill down and see which customer still has open invoices from that period. So that's more operational, less related to AI. Speaking about AI, we have other reports related to predictions, where if I zoom in to the report that you will see in a second, let me do this. You will see on the left-hand side, and knowing that in my system, I'm on the 19th of February this year, you will see what is due, right? The due dates. You will see the evolution here in green of the payments. And of course, since today or from today, we don't have payments anymore. So we will start with the predictions. And what we can do in the solution, we can define an interval of confidence. So here 95%, that allows me to display what would be the minimum amount that I'm expected to collect, or what's the maximum amount that I could collect. And of course, I can map it with what is due for the given day. And that might give me what we call the treasury gap. So the difference between the two, which is, for example, the amount that I should borrow at the bank if I don't have enough amounts on my bank account. If I zoom in a little bit and show quickly the 360 view of a customer. So let me choose the customer Michiels here. Well, everything that you have seen actually at the global level, and depending on your organization, and because you can build actually as many hierarchies, presentation or calculation hierarchies as you want, you will see at the customer level, you will see the evolution of the payment behavior over the time, evolution of the risk, different KPIs. Of course, there are many more KPIs, and you can pick and choose which KPIs you want to see. And next to that, you will see the different invoices that have been loaded. And for each invoice, you will see a prediction date. And next to the prediction date, you will see the probability that the prediction date is right or not. Of course, from a more operational point of view, if there are promises to pay, disputes, or installment plans attached to the invoice, you will see it. You can always click and see the details. So here there is a promise to pay for 2 invoices, and the promise to pay is broken, which means that I should normally, as a collector, take the relevant action and certainly call my customer and ask for an explanation on that. You can also see all the collection actions. I just mentioned it, but you have a starting point, which is the invoice, but you have another starting point, which is the case that has been created. But more interesting, you will see the dunning history. So dunning history consists in definition of, that's fairly classical, of dunning steps, right? That you will link to different kinds of groups of customers. So here we have a customer belonging to the category high risk residential, for which a series of steps have been defined, and each step will lead to a set of actions. Those actions can be fully automated, like the sending of an email to a customer, the sending of a reminder. It can be asking a user to call this customer, or it can be even connect to another system and, for example, block deliveries of goods to the customer. So it's really designed to fully communicate and interact with other systems from your architecture. Now, from a purely operational point of view, the solution has been designed first to deal with a complex environment. Complex environment means heterogeneous environments or heterogeneous teams with maybe centralized part of the collection which is centralized, or part of the collection which is decentralized, with maybe people taking care of some customers per language, per regions, but also per level of risk, for example. So I could myself take care of the French-speaking customers as I'm French-speaking, and but the standard ones, and I could maybe take care of them when their risk is below high, for example. And once the risk of a customer becomes high, the system can automatically transfer all the open cases and that customer to a dedicated team specialized on risky customers. And this is done completely automatically, and again in full integration with your CRM systems and ERP. Now, what does that mean operationally? Operationally, it means that I am Deborah Smith here. I will see which of the customers that I need to take care of today. So here, 4 in the demo system. I will see where they are in the status. I will see the amount, which is still open. And I, as a user, I can also decide to process or not some invoices. So that's, again, the beauty of AI. It proposes you actions. It proposes you to optimize your work, but you, as a user, you can always decide what you do with that information. So here, I've got information that AI doesn't have yet. I know, for example, that there is a global payment plan with this customer, and I can confirm. The system will learn from it. It will disappear from my list. Next time, it won't be in my list. And I can then start working with my customer. Then the process becomes fairly classical. I will see all the open invoices, payments, and credit notes for this customer. I will see how many of those invoices are overdue. I can select those invoices and payments and create then a case, whether it's a dispute, a promise to pay payment plan, or simply a contact or a manual reminder. But that's fairly classical, I would like to say. Now, of course, I spoke about AI. But next to that, we still need the standard, I would say, reports and processes. So I'm still Deborah, and I will see out of all the customers that I'm in charge of, I will see that 217 have open invoices, out of which 157 have overdue invoices. I created 23 cases, out of which 22 have late actions. So the question is, what am I doing? I'm not really following up on my customers, neither am I on the open cases and open actions for this customer, right? So it's always a combination of what AI can deliver you in terms of KPIs, in terms of actions, in terms of process, and then what you do with it and how you report from an operational point of view to your management. The last point maybe to cover is credit limit management, where you can define formulas, and like I said, the system will identify whether a customer is about to reach the limit, or a customer has an increasing risk, or whether a limit needs to be recalculated, and it will propose it to the user, the credit limit manager, then for review. You can define formulas, but those formulas are, again, they work together with AI. AI is used to as well help in the calculation of those limits, but of course help as well to make predictions or projections of evolution of business with the customer, and of course matching the evolution of the limit together with the evolution of the business, so that you know actually when a customer is expected to really reach the limit, and when you really need to review the limit for that given customer. So again, in a nutshell, that's what I was willing to show you today. So feel free to ask questions, or feel free after to get back to us. Would you like to know more about the solution? Amber, I would like to get back to the slides, please. So after demo, maybe a couple of few additional messages. So the solution is used in many industries and for customers from different sizes, whether it's a multi-country, multi-currency, and multi entities, right? Up to a small customer having one entity, one currency, for example. So that's really the key benefits of such solutions, is that it's super flexible in terms of implementation and easiness of use. And when you look at here on the screen, some of the numbers that we get from our customers, I would like to emphasize or strengthen two of those KPIs. One is the reduction of operational efficiency by 24%. And on the other hand, the improvement of cash forecast accuracy by 21%. So that's very important actually for departments, cash management departments working together with cash collection, right? Because with the solution, we make those predictions, but we also help users adding information which can be relevant for the predictions and also for the cash management. And that's why by working it together, so AI predictions with user information, we managed to get an improvement of this cash accuracy by 21%. So in a nutshell, that's about cash conversion. Many thanks. Amber, back to you.
Thank you so much, Edouard. Okay, this is the moment where the promise either holds up or it doesn't. And what we saw is something pretty important. This isn't just collections automation. It's the important thing to take away here. It's a fundamentally different way of thinking about cash conversion, where you're segmenting customers based on behavior and risk. You're predicting cash, not reacting to it. You're automating dunning and collections intelligently. And you're actually optimizing how your team spends time. All of that inside a system that connects back to billing, RevRec, and the full order to cash lifecycle. This brings us back to the core idea. Collections isn't the root problem. It's just where the symptoms show up. So if you're thinking about how this applies to your environment, we have some great folks on the call today. There are 3 really simple next steps. First, explore your current process. Where is cash actually getting stuck? Second, align on priorities. Is it invoice accuracy, collections efficiency, forecasting, or maybe it's all of the above? And third, build a value case, because improving cash conversion isn't just operational, it directly impacts working capital, liquidity, and ultimately growth. So now we've made it to the open dialogue section of our session. And we've had some really good questions rolling in, things that we hear a lot in the last few months. So we're going to open it up. I'm going to stop sharing my screen and have our panelists join us with live video. And the first question that we had a little bit ago is, how much historical data does the AI need before its prioritization becomes meaningfully accurate?
Yeah. So we ask Amber usually 3 to 5 years of historical data, and we ask that during the project, so that when we start, as soon as we start implementing the solution, users have access to the acceptance system or to the test system, and they have access to the outcome of the calculations of the solution, so that they can challenge the different KPIs that are being calculated by the solution, so that when they start working in production, we rebuild as well 1 year of historical data, meaning that the day they go in production, they start with 1 year backwards, so that they can already analyze the different trends from their customers.
Excellent, super helpful. One note here is we have a little bit of time for questions today. I just want to add this. If we don't get to your question, we will absolutely follow up and even book time if necessary to talk in more detail. Here is a question that just came in. Is there flexibility with data fields associated with each invoice? If yes, can you give us some more details?
Yeah, that's a very good question, actually, and super important one. Because the way we have designed the solution is to making it completely flexible with regards to data. Why? Because we know that users might need data for different purposes. They might need data simply for information purposes. Example, some companies do internal risk calculation, right? And they need this risk as well in the operations, or at least they need to be informed about that risk. But second, data can be used for process point of view. So that risk that is calculated outside the solution could also help in defining certain processes. Remember, I spoke about dynamic dunning. Typically, that could be used as well in the dynamic dunning. And third, external data or additional data could also be used for KPI purposes. So the whole calculation engine that is provided by Cash Conversion can incorporate any kind of data and provide KPIs at any level, actually. So that's why it's very important. So that's why we have created those concentric circles. So you need to have a basic set of data for the solution to work, which we have extended with data models that we knew already. And then you have a third level, which is completely flexible and open for our customers to integrate their own data in.
Super helpful. Okay, a couple of additional questions here that came in earlier. Can the system handle multiple collector teams across different regions or entities?
Yes. So that's exactly what I explained. So the solution is designed for complex environment. So usually in different companies, you may have teams which are completely centralized. So it's only one team taking care of the collection for the different entities of the company. Or it can be each of the entities responsible for their own cash collection, or it can be a combination of both. And we needed to provide a solution capable of dealing with all those different scenarios, but automatically. That means that, yes, sometimes the cash collector can be appointed once a customer is created or once a customer is onboarded into the company. But then you have the customer life cycle, and the customer might change actually from accounting clerk to accounting clerk, depending on different variables, among which the risk, for example, that I mentioned. And that's why the solution is designed as well to take some of the cases and transfer them automatically to another team. And of course, providing the right notifications for each of the users. For one, to explain that all the cases and the user has been transferred to another team or to another user. And on the receiving side, to say that the case has been transferred to him or her.
Makes sense. Very capable, it sounds like. Okay, next question. This is coming in from a customer of ours. Thanks everyone for joining. We have a couple of customers on the call today. Is cash conversion available to existing RecVue customers, or is there a rollout timeline? Is it available now, or is there a rollout timeline?
No, the cash conversion is available now to all the customers. So I would be very happy to meet with the RecVue customers and show them the value that the solution can bring to them.
Good.
And I'll just add to that. I think so for any RecVue customers, please don't hesitate. Reach out to us through your CSM or through any one of us, and we'll and set up a discussion.
Fantastic. A follow-up question. Is there a functionality to manage customer disputes? I think we covered a little bit on that, maybe a little bit more detail here.
Yeah, so next to providing segmentations and reports, the solution is really what we could call a payment CRM solution. So it not only helps teams to select the right customers to focus on, because those are the customers on which the system demonstrates that the team will have the most impact on the collection or on the risk, right? But then we deliver all the features to create promises to pay, installment plans, but also to manage disputes. And when you manage a dispute, it's really a task management system, because not only you manage the dispute, but you will have to manage the different tasks that are to be assigned to different people from within the organization. And on top of that, of course, the analysis of the possible timing between each of the tasks and the SLAs actually, internal or external SLAs. Yeah.
Makes sense. Thank you for answering that one. Last question. I think we have time for one more here, and then we'll wrap up for today. Can cash conversion run alongside our existing collections tool during a transition period? So great question around implementation.
Yeah. So when we originally designed cash conversion, we made every use case completely independent from the other use cases, meaning that we have customers today that are using their current ERP for dunning processes, so the automatic sending of reminders, and that needed a solution to, on the one hand, provide them with risk reports and segmentation based on payment behaviors, but also cash forecasting using predictions, and to also help them to better organize the work of their teams. So we can really integrate the solution and combine actually the two processes into one process within the solution without forcing the customers having already a dunning system in place to change their dunning system to cash conversion.
Thank you, Edouard. Very, very helpful. Okay. Thank you again to everybody for joining us today, and to Nishant, Robin, and Edouard for walking us through cash conversion. I want to underscore, if there's one takeaway today, it's this: revenue doesn't mean much until it becomes cash. And the companies that win are the ones who control the entire journey end to end. Thanks, everyone. We'll follow up with the recording and next steps. If you'd like to continue the conversation, we would too, or see RecVue in action, reach out to us at info@recvue.com or visit our website. On behalf of the entire team here, thanks again for your time and engagement. We look forward to connecting with you soon.
Thank you all.
Thank you very much.
Thank you, everybody.